How to buy a home with no money, even if you don't qualify for a bank loan, even with really bad credit and no cash. I get asked all the time if it's possible to purchase a home with no money down and no mortgage. The answer is absolutely yes. In fact, it's 2023. Not only are average United States home prices at an all-time high, above $400,000, but interest rates don't seem to be coming down at all either. It's July and we're still looking at 7.2% interest rates nationwide. It's not looking too promising for the budding home buyer. Even if you're not looking to build a multi-million-dollar portfolio in real estate, you can absolutely use what I call zero-down financing structures to purchase real estate with no money, no credit, and no borrowing from banks. Here are some of the most popular structures I teach inside my mentor program. Subject to multi-mortgage, land contract, assignable cash deals, and for rent method deals. Let's talk about a few of them. Subject to. Subject to is one of the most powerful zero-down strategies you can use to buy property with no money down. I detail how Subject to works step by step in my presentation, How to Make $1 Million in 2 Years. Subject to means that you're buying a property subject to an existing mortgage. You take over the payments without qualifying or signing on the loan. Normally, what would happen in a conventional setting is you'd get a loan from the bank or a lender to help you purchase the property, whereas in this case, you don't need to go begging to the bank. Instead, you take over the mortgage a homeowner already has in place. As you can imagine, there are many properties out there that were secured a few years ago with incredibly low interest rates. I personally found many subject to properties that were locked in at an interest rate under 3%. This is how you can purchase properties in 2023 with a very low interest rate, which would mean a dramatically lower monthly payment and much higher cash flow on every property that you buy. So with subject to, we as the investor agree to make payments on the seller's mortgage until it's fully paid off. The mortgage remains in their name, but we get the deed and control of the property. We are the new owners and have control of the property and get all the profits and tax benefits that it brings. The next structure is multi-mortgage. This is a structure I created simply because there weren't any others out there to address this. You're still taking the property subject to, but this time that property may have some equity in it. When you take most properties subject to, they're going to have mortgages up to the value of their property or within 70 or 80% of their value. And it's easy to take those properties over and get that equity for free. But let's say somebody has a property that they only have a mortgage on that's 20% of their equity. Let's say it's a property that's worth $100,000 and they owe $20,000 on the mortgage right now. What you can do is take that property with a multi-mortgage and give them some of their equity. Let's say it makes sense for you to pay them $100,000 for that property, and let's say it's worth $100,000. You're going to be able to get $1,000 of income on it, and your payments overall aren't going to be more than, say, $900 a month with taxes and insurance and property management. If so, that property might make sense to take over. So to do that, the seller deeds you the property, you start making payments on the first mortgage of $20,000, and then we create a new second mortgage on the property where the beneficiary is the owner and the seller of the property. So you're going to have an $80,000 second on that property that you're going to make payments on. If you default, they can take the property back from you. So they're protected, and you're on the deed, so you're protected too. If you want to take this structure to the next level, by the way, you can make the second mortgage interest-free. So let's say the PITI mortgage on the first $20,000 is $350 a month, and your total payment is $900. That means your second mortgage payment is going to be $500 or $550 a month. 900 minus 350 equals 550. If you make the second mortgage principal only payments, you'll pay off that home in about 12 years. 80,000 divided by 550 equals 12 years of payments. This is a third of the time it takes to pay off a 30-year mortgage with interest, and the payments are about the same amount each month. This is a radical increase in profit, and all you had to do is learn how to ask for it. All right, so that's the top two structures briefly, subject to and multi-mortgage. Of course, as you go down the structures, you have less and less control of these deals. The hierarchy of zero-down structures is also a hierarchy of control. It doesn't mean that you shouldn't do these other structures. Multi-mortgage usually just makes as much sense as a subject to, although I'd much rather see you negotiate a much smaller price when you do a multi-mortgage. Land contract or contract for deed. It's called a land contract if you do it in a mortgage state like Indiana, and a contract for deed if you're in a trust deed state like Illinois or California. Either way, they're pretty much the same type of document, and you probably want to have an attorney that's local to you draw up this document. You want to make sure it's done properly for your particular state, and it shouldn't cost you more than $200 or $300 to have an attorney draw it up for you. Basically, a land contract is the same as if you were buying a car using a bank loan. When you buy a car, the bank holds the title to the car until you pay it off. Their loan document says you're going to pay X amount of dollars over X amount of time at a particular interest rate, and then when it's paid off, the bank is going to transfer the title of the car to you. That's very similar to what's going to happen with a land contract or a contract for deed. The person who sells it to you is going to hold the deed of the property. You're going to make payments to them based on whatever you agree upon. And once those payments are paid off, then the seller is going to transfer the deed. You can also buy houses like this with zero interest loans from the seller. That means you pay off the mortgage in approximately 1/3 the time it takes to pay off a loan with interest. This is huge, by the way. Please don't miss this. It's how you pay off your portfolio and retire very quickly. If you sell on land contract, hold the document in your files. Don't record it. If you buy on land contract, make sure to close at a title company, get title insurance, and record the land contract. It'll give you more control of the deal and make it easier to get rid of a defaulting buyer. The next one is the for rent deals. This is just an assignable lease option. We ask the seller to sign a one-page lease option memo giving us the right to assign our right to buy on a lease option and assign our right to buy for profit to a new lease option buyer. The lease option agreement outlines the price, the payment, and the length of the option, typically 3 years. Once we have control of the property, we raise the price by, on average, 10%. We sell the property and charge a down payment / option fee / profit to the new buyer. So let's say the seller wants $300,000 for their house. We agree to pay their asking price on a 3-year lease option with monthly lease payments of, say, $2,500 per month. We raise the price by 10%, and we can do this because we're selling on terms. So we raise the price to $330,000. At $30,000, a profit is going to be ours. We ask the new buyer for a down payment of $30,000, which goes to us, plus the first month's rent, which goes to the seller. Usually we get half the down payment in cash and half as a promissory note made in payments over a 3-year period. So you're in and out of the deal on this one. You have no money in it, no credit was required, and you get a lump sum profit plus monthly payments from the buyer. The seller gets a full price offer and doesn't have to pay a realtor commission. The new buyer gets a property that they couldn't have qualified for if they had to go through a bank. It's important to note that 75% of the United States does not qualify for a mortgage. Lots of people would like to buy a home for their family using this method. How to succeed. The key to making this all work is having the ability to communicate and structure these deals properly. That's why I put together the Zero Down Investing Accelerator, my step-by-step 6-month mentor program designed to equip you with the confidence and skill you need to go out there and make these deals a reality. You can also buy a home in 2023 without having to go the path everyone else is trotting. I've had hundreds of successful students, many of them who have gone on to purchase their own primary residence using these strategies. It's one thing to understand conceptually how this works. It's another thing to actually walk a seller through this process and compel them to want to do the deal with you. My training is what I like to call stupid proof, meaning if you follow my instructions exactly, you can't screw it up. I've got over 160 documented student success stories on video that prove it, and they're just a fraction of my successful students over the years that I've been teaching. My name is Joe Crump. I've been a real estate investor and mentor for close to 40 years. When I started, I built a $17 million real estate business in 3 years, starting from scratch. In 1991, I lost it all because of wishful thinking and stupid but common mistakes. Unfortunately, I still see investors make these same mistakes every day. That's when I developed the pillars of the Zero Down Investing framework that I teach and use every day. Over the years, I've trained hundreds of people on my techniques and led them to real estate success. If you'd like to learn more about how these Zero Down structures work and how you can become part of my program, feel free to book a call with us now. Here's the link. You might also want to take a look at this income earnings disclaimer, which is required by the FTC for every opportunity, income opportunity out there. All right, good luck. Thank you.